This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Dustin Hoffman.
Good day, everybody, and welcome to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Dustin Hoffman. Today is Valentine's Day, Tuesday, February the 14th, 2023. Guys, if you haven't gotten your wife flowers yet, the stores are going to be closing soon, so get with it. We're going to have a check of your weather outlook and find out what after Valentine's Day is going to look like. And of course, we'll also talk with Geoff Cooper. He's the president and CEO of the Renewable Fuels Association. But first, let's run down those markets. It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net. Well, we're at the end of another trading day, and it's time to turn to the folks at agmarket.net. We've got Jacob Burks joining us today. And Jacob, the market is a little bit of a sell-off going on today. What's going on?
Yeah, there's a little bit of a bloodbath, in the grain market, but it was just a nice little one, so it wasn't that bad. Saw a lot of bear spreading in the corn market. You saw it end up being down 2 to 3 cents across the front part of the complex. But your new crop was the backup. We went back and tested the $6 level again. Went in $5.98 and 3/4. So there's a lot of resistance up there at this level. And I think a lot of that has to do with some farmers selling. I think you got a lot of guys at $6 that have some sell orders in there, and so that's going to be a tough nut to crack right now. The bean market sell off a little bit, 5 to 6 lower. But after the run up that we've seen in the last couple of days. That could be healthy for the market. As a matter of fact, we're looking at the wheat market down 5 to 6 cents with some thoughts of some rain showers coming across the Midwest. But all in all, you look at this, and the wheat market still continue their uptrend. Have a little bit of a negative close, but that we went up, we made some new highs on this move, backed off a little bit. So I don't see anything technically that disrupted anything. Soybean meal traded on both sides of 500 here in the March contract. So. A down day, yes, but nothing disruptive.
Now, of course, there's a lot of eyes on what's going on, a little bit of tension maybe with China. We're coming up on the 1-year anniversary of the Ukraine and Russian situation. Obviously, Brazil's harvest is still going along. Argentina's still dry. I mean, there's just a lot of little mitigating factors, but not a lot of change at the moment, just enough to keep everybody cautious, I suppose.
Yeah, you just covered a lot of headlines there, Dustin, and and those are all in the market, and the market is still digesting all of that information. Over the weekend, you see raised tensions that sparked the wheat market and the corn market for a while. You see a lot of different scuttlebutt right now about are we going to get the corridor deal where we continue to move grain through the Black Sea region. So. Those are things that the market's focused on. Those are the things that we have to watch and look at every day, and it makes a big difference in what we're looking at from global trade. The China deal with, it's obvious China would rather not come and buy grain from us. They've made several things happen over the year that they would rather buy, corn from Brazil. But the fact is, the dynamics of Brazil's export market is going to be changing when you increase the amount of volume that they will be going through right now, and then you have rains on top of that. To make it a little more difficult to get those type of exports out, there's things that China has to be careful with too, and I think that you've seen them come and buy some of these late flash sales last week or 2 weeks ago. So it's all still there. All that's in the news. We know that the tensions are there, but at this point right now, I think all that bullish news is in the market. They're going to need something else bullish to feed this thing.
All right, now moving over to livestock. I mean, cattle look like they took a little bit of a hit today. Hogs, I mean, are they getting some footing? I mean, what are we seeing over there in livestock?
I do. First of all, I mean, they are getting footing. You've seen the kind of rounded bottom in some of these deferred contracts of the hog market. I mean, even June up another 50 cents today. So we've seen some good recovery on here. I have to really question, we're the April contract of hogs, traded here today at 87.25, up 90 cents. That right there is well above the lean hog index. Feb's going to be going off the board here today around that 75, 67 area. So that's a large premium to the lean hog index, and that's something to watch and see how these cutouts make it through it. You have seen China hogs rally a little bit here as of late as well. So some optimistic things anyway in the hog market. The live cattle, you've seen kills get smaller. You've seen these packers are going to have to start buying up for these cattle. They don't want to see these lower kills. They don't want. They would rather have their contracted cattle to kill, but they're going to have to come to the cash market. And this bullish, the bullish sentiment is really heating up here in live cattle. We built a lot of it in, but if this cash market continues to lead the way, we could see these front months continue to rally. But today we saw a little bit of pullback in the front months compared to the back, but not a significant amount. We're 20 to 30 lower here right now. We got the feeder cattle, the same type of story. We're small decrease today in price, but a really bullish tone going through these cattle numbers as we start chewing away what's happening in that cash market. That could be the real driver here.
Well, obviously, with Brazil looking to have some decent crops coming out here, or could be close to record crops, if not record crops. The U.S. maybe sees a turnaround this year. Depends on what La Nina wants to do, but obviously that's all on the horizon. But farmers need to be thinking about protecting themselves now and their investment now. What kind of things should they be considering, even if they've already got a tentative market plan in place? Can they alter that in any way, shape, or form in this situation?
Well, I think you're exactly right. Having flexibility is what we say a lot. We use that term a lot. And first of all, South America will have a record corn crop. I mean, we're well above that. We know that's going to, well, I shouldn't say we know it. It's not even in the ground yet, but there's high odds that we'll see a record corn crop. The flexibility in that marketing plan, Dustin, is what you're talking about. And having that opportunity to put things in place for certain time periods, using some of these short dated options. So we're highly encouraging guys. Let's get past that planning intention report. That's a huge number. I mean, you start looking at the 180 million acres that we need to see in corn and beans. So that some of those May options will get you to the end of April. That covers through that planning intention report at the end of March. And that's the thing I'm focusing on right now is let's see what we get planted in the ground. Let's cover that new crop price right now. And there's a million different strategies we could go over and look at, but that's what my advice is right now is get some downside protection. Even though seasonally this is not the best time to be making sales, we're seasonally not here at this high of a level either.
All right. Well, Jacob, if folks want to talk some of those market strategies with you all at agmarket.net, what's the best way for them to get in touch?
Hey, take us a look. That's in our name, agmarket.net. We will have a 30-day free trial for you there for all of our intel, all of our information we send out. If you want to talk to one of us individually, you can find us there on our team page.
All right. Well, Jacob, we thank you so much for the insight, and we'll talk to you again real soon.
Hey, thanks for having me, guys. Enjoy it.
That again was Jacob Burks of agmarket.net. Let's take a look at the closing numbers. That's going to come to us from Bar Chart. March corn was down 2 3/4 at 682 1/4. December new crop was up a penny at 597 3/4. March soybeans down 5 1/4 at 1537 1/2. November new crop was trading at 1 3/4 cent lower at 1383 even. Soy meal was down $2.90 at 482.50. Soy oil up 29 cents at 60.53. Chicago wheat down 4 at 796 3/4. Minneapolis wheat up a half at 923 3/4. Kansas wheat down a nickel at 895 1/4. May oats down 4 3/4 at 363 1/4. April live cattle down 42 cents at 164.67. March feeders were down 55 cents at 186.65. April lean hogs 90 cents higher at 87.25. April cutouts 97 cents higher at 93.60. Class 3 milk down a penny at 17.93. And that's been our ag market recap. We're going to take a short break and hear from our sponsor, the Iowa Soybean Association and the Soy Checkoff. When we come back, I sit down with Geoff Cooper of the Renewable Fuels Association. This is Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
Welcome back to AMPM from the Iowa Agribusiness Radio Network. I'm Dustin Huffman. Last week, we had the Iowa Renewable Fuel Summit here in downtown Des Moines. It was a chance for stakeholders from across the industry to come together, talk about some of the accomplishments of last year, what they're trying to do for next year, and also address some of the concerns, challenges, and innovations that are coming for the next couple of years in the industry. I had a chance to talk with President and CEO of the Renewable Fuels Association, Geoff Cooper, to talk about why he says 2022 was a pretty good year and what they're looking to do in 2023. Talking right now with Geoff Cooper of the Renewable Fuels Association. And Geoff, you just got done speaking here at the Iowa Renewable Fuels Summit. What was the message you brought to the folks here in Iowa?
Well, the message was that 2022 was a really good year for the ethanol industry, one of the best years we've had in recent memory. We had some significant wins in terms of policies and regulations. We finally felt like we got the renewable fuel standard back on track. EPA stopped giving out all those small refinery exemptions. We were able to get a waiver to allow summertime sales of E15 last year, which was a huge benefit to consumers during a period of record high gas prices. And we got the Inflation Reduction Act passed, which had a huge suite of favorable tax incentives and grant programs for renewable fuels in there. So overall, 2022 was a great year. The message today was now it's time for us to put all of that hard work and success into action, and especially the Inflation Reduction Act. Getting those programs implemented correctly and smoothly is going to be a top priority for us this year.
And talking about the what you got there in the Inflation Reduction Act, we talk about how that can be applied, I should say, and how that's going to be beneficial.
Yeah, absolutely. There were a number of incentives and programs in that bill. One is called the Clean Fuel Producer Tax Credit, which pays up to $1 per gallon in a tax credit to producers of clean fuels, and they have to demonstrate that their fuel reduces greenhouse gas emissions by 50% or more in order to be eligible for that tax credit. And we know that corn ethanol today, kind of your average ethanol, is right around that 50% mark. We think with investments in carbon capture and sequestration and other technologies, ethanol is going to be reducing greenhouse gas emissions by 70, 80%, maybe even 100%, maybe net zero by 2050. And that would obviously allow producers to qualify for that tax credit. There's also a carbon capture and sequestration tax credit in there. There's a sustainable aviation fuel tax credit that's worth up to $1.75 a gallon. And then there's another $500 million in grants for biofuels infrastructure. So retailers and marketers who want to offer E15 and E85 and other higher blends have assistance from USDA to put that infrastructure in.
You know, and being in Iowa right now, carbon capture is a hot button topic. I know Monty talked about a little bit, and I know on a national level it's one thing, but on state level it's different. Yep. But talking about the fact that there's respect for what the farmers are concerned with, the landowners are concerned with, but also they want to get to the table and find out where they can find that common ground, where they can find cooperation, because they also need this. Talk about the benefits of that again for people that maybe just need an easy understanding of it.
Right. Well, as I talked about this morning, I mean, the vision that most folks have, including the Biden administration, is the only way we're going to significantly reduce emissions from transportation is to move everything to electric. And so they're putting a lot of support behind electric vehicles. So in our view, the way we compete with that in the ethanol industry, the way we demonstrate that our carbon intensity is actually lower and can be lower than electric vehicles is through the addition of carbon capture and sequestration. That is the single largest tool we have available to really reduce the carbon intensity of ethanol. We're already 50% better than gasoline, but we're going to need to be 70, 80%, 90% better in the future in order to compete with electric vehicles in the long term. So that's why CCS and these pipeline projects are so important, is it helps keep ethanol in the game long term, and obviously that helps keep a huge market for corn open as well.
Another thing that we're obviously talking a lot about, and heard even from Governor Reynolds, and I know it's something we're talking about, is getting year-round E15, whether that's on a national scale or the Midwest governors doing it on their own, but it just seems like there's crickets from the White House on that as well.
There is crickets, and it's beginning to get very worrisome that we're now 90 days away or less from May 1st. And May 1st is an important date because that's when terminals, fuel terminals, need to come into compliance with summer gasoline specs. Right now, nobody knows. Is E15 going to be allowed in these 8 states this summer or not? And it's because the White House hasn't issued its final decision. It hasn't even issued its proposed decision yet. And so we're very concerned that 90 days, it's going to be tough to get all that work done before this summer and allow retailers and marketers the time they need to make these adjustments. So it's crunch time, and we are urging the White House to get off a dead center and take action to implement this request that governors made more than almost a year ago now. It was last April when they sent that initial request in.
And it's interesting because it's one of the first summits we've had in a long time where no one's upset that the EPA didn't do something or did do something. They're finally saying, hey, the EPA did what it was supposed to do, and now it's just sitting here in a stall pattern.
Yeah, that's right. And I'd say in general, this EPA has been very good to work with. They seem to understand the role for biofuels in the administration's climate and clean energy agenda. But it's when you get to the White House that things tend to slow down sometimes. That's the case with the E15 governor's petition. So yeah, I don't think anybody's mad at EPA. They understand that the hang-up has been at the White House, and so that's where our attention is focused right now to try and break that logjam.
All right, and what else are you thinking about for 2023 on this horizon for the industry in general?
Well, one of the other big things we're looking at is really restoring export markets to pre-COVID levels. The most ethanol we ever exported was around 1.8 billion gallons, and that was back in 2017 or 16, I think. Last year, 2022, we did 1.4 billion gallons. So we've still got work to go, room to grow exports and get back into a growth posture in the export market. So we're going to be spending a lot of time and focus on that this year as well.
All right, Geoff, I thank you so much for taking the time to visit with us here today.
All right, thanks, Dustin.
And that again was Geoff Cooper, President and CEO of the Renewable Fuels Association here on Ag Matters PM. Let's go ahead and take a look at that ag weather outlook. Kind of a dreary, drizzly, rainy day. Check local listings to how the day fared for you. But here in Des Moines, it was just kind of an off and on sprinkly kind of day. Now, the rain shower activity looks to continue for the next 24 hours or so, but it's going to start getting colder, and we're going to see that rain change over to snow. We could see some heavier snow in the south. Let's find out what the National Weather Service has in store for the next 24 hours. Well, as we said, we saw rain across much of the state today. Highs were in the low 40s to the low 50s. Now, tonight is when things are going to start to change. We'll see those rain showers and breezy conditions continue, but temperatures will begin to start falling in the northwest part of the state, and we'll see lows anywhere from about 20 to almost 40 degrees, a big range there. But temperatures will continue to fall throughout the day tomorrow. We'll start to see that rain change over to snow. The heavier amounts are possible more in the southern tier counties of the state, more light amounts up into the north, but that doesn't rule out any chances for some not too favorable weather. Taking a look at the affiliate forecast for tomorrow, Cherokee looks to have possibility of some snow and 24. Shenandoah will see snow and 34, and they'll be in a winter storm watch throughout the day tomorrow. Des Moines looking to be cloudy and 35 with a chance of some snow. Albia looks to be cloudy with a chance of snow and a winter storm watch coming up in the evening and a high of 38. Tomorrow, Waterloo cloudy, chance of flurries and 34. Clinton mostly cloudy, just a chance of flurries and 44 degrees. And for more detailed forecasts in your area, tune to your local Iowa Agribusiness Radio Network affiliate. And that's been our Ag Weather Outlook. And with that, we're at the end of today's show. You can find all our content online at iowaagnet.com. Don't forget to follow us on Facebook, Twitter, LinkedIn, TikTok, and on our YouTube channel. And while you're there, don't forget to subscribe and hit that bell icon so you're notified when we put out a new video project. You can also check out our free twice daily market podcasts on Apple, Amazon, Google, Spotify, and Podbean. From the IARN studios in Des Moines, I'm Dustin Huffman. For Mark Magnuson and Riley Smith, we thank you for watching. This has been Ag Matters PM.